Hello and welcome to the special episode of Axis Mutual Fund Masterclass and Investor Education Initiative. I'm Tamanna Inamdar. Mutual funds are subject to market risk. You must have heard this announcement several times on television during advertisements. But how much do we really know about mutual funds? How do they work and how are they different from other instruments? Well, if you are someone who is curious about mutual funds but don't know much about it, you've tuned in to the right show. In this special broadcast, we will deep dive into the whole mutual fund phenomenon and address your questions and queries. Joining us now is Raghav Iyengar, Chief Business Officer, Axis Mutual Fund, who will be breaking down the basic details about mutual funds. Raghav, it's so great to have you with us in the studios today to talk about mutual funds, something that everyone knows they should do, but maybe people are not quite sure what it is. So let's start with the basics. If I were to ask you, what are mutual funds, what would you say?
Actually, Tamanna, thank you so much for doing this show. I think it's a rare moment that we go back to basics. I think the financial markets are very complicated. Most investors know they have to put money, but they get very confused with the terminology. So I think this show hopefully will help sort of clear up some of those doubts. Now, what is a mutual fund? Mutual fund is nothing but a collective pool of money. So if you remember, let's take an example, right? Maybe if you go back 70, 80 years, how would people buy stuff? You will have a house, you'll have 7, 8 houses put together, they'll all put some money in and then they'll go and buy collectively, they go buy something. Or let's say if I had a group of friends and one of them was obviously very, very good at making financial decisions, we would all pull in money and give it to him or her and that person would do their job. Mutual fund does pretty much the same thing. It is a regulated entity. So now that is the big question mark, big advantage here. It's extremely regulated. It's not some informal thing where you just hand over money and suppose it doesn't come back. So it's very, very tightly controlled by the regulator. It's very transparent. And Indians have this fundamental advantage that we save enough of money. We are one of the best savers in the world. Our problem is that we don't know where to invest that money, right? So we do all the traditional things. We go put money into gold, jewelry, banks, traditional savings, everything.
No, so let me come to that. So from what I understand, mutual funds is when you outsource the job of making good financial decisions and growing your savings to the experts who know their job.
Absolutely.
Now, why should people look at mutual funds versus all of the things that you have described? Because mutual funds right now is the go-to for Indian investors.
So I think
what do you think has changed?
I think 3, 4 things. I think one is obviously thanks to people like you. You have in some sense decomplexed mutual funds, right? Mutual funds were about 25 years, 30 years back. It's not a new industry. It's been around for the last 60 years. Open-ended mutual funds have been around for the last 30, 35 years. Right?
What do you mean by open-ended?
Open-ended means that you can come in and get out anytime. The earlier mutual funds, you could come in at a particular point of time, but your exit was subject to certain things happening, not happening. It's not the current structure. So today, one thing that the regulator has done is that they've completely simplified it. They made it extremely transparent. But the biggest advantage of a mutual fund is, like you rightly said, you're giving it to a professional to manage. And they will manage it in accordance with your type of investment. So it's not that you give me a sum of money and I decide whatever I feel like doing, I do with it. So today morning I get up and I say, okay, Tamanna gave me X amount of money. Today I feel like buying gold, I buy gold. Tomorrow morning I buy something else. No, if you give me money in an equity fund, which is where most of our investors are today, my fund managers or the fund managers or the experts will go out and buy equity with it.
No, so I want to make this even simpler. So because a lot of people say that they've put money in mutual fund, they've put money in equity without understanding what that is.
Okay.
So when someone comes to me and says you should invest in mutual funds and in equity mutual funds, what does that mean? That my, say, 1,000 rupees is getting clubbed with everyone else's, and then what are you doing with it?
So we take that money, we take a pool of money from everyone else. So let's take, let us say there are various types, categories of where you put money in equity. So let's take the easiest category, which is the large cap category, which is basically the top 100 companies of India. right? You take the money, you put it in, now you give it to the fund manager. Now obviously some companies do well, some companies don't do well. The fund manager's job as an expert is to try and identify and put that money to work in companies which he thinks or she thinks will do well over a period of time. So essentially, instead of you going and buying those companies directly and worrying about how those companies are they doing well, how is the industry doing, etc., the fund manager, because that's his full-time job, will do that for you. And in the process, you're actually a fractional owner of that company. And because it's equity, and equity means you own a part of that company, so you need to be a bit careful, because if that company doesn't do well, your money could go away, which is where I think investors get a little worried that, hey, could this go down?
So I don't have this headache of what happened to this company, what happened to that company. I've given the money to a mutual fund and they are doing the job for me.
Absolutely. And so typically when you put money, so the more complex categories of investments are equity, because you need to then figure out what the company is doing, what the industry is doing, what the economy is doing, what the world economy is doing. So you can imagine the amount of research or the kind of things that you have to do. So if you're good, and most people are do other things in their life, right? There are a lot of people who do this as a hobby. Many of us are trained to do this. So so it's giving it to an expert and allowing that person to manage your money in the way that you want it to.
And there is a charge for this. There is
a charge. Yeah, the charge is regulated. There is a maximum charge which is prescribed by the regulator. So it's not up to me to charge, hey, I want to charge whatever I feel like. It's not like that. There is a maximum charge that you do. And as the industry gets bigger and bigger, the charge is actually getting more and more lower and lower. So in a way, it's a very, very good competitive way to make sure that your investments or your savings are doing well for you.
Is it also the right way to look at it that this reduces my risk as an individual?
Yes, it does.
Because I might not understand where to put the money or track it 24/7, what that company is doing, what is happening in the world or in the country to impact that business. I don't have to think about all of this.
Yes, and the other thing is that, typically you're buying into a portfolio of companies. So when the fund manager is buying a set of stocks, he's not buying 1 or 2 or 3 stocks, he's buying a set of companies, right? So one of the earliest reasons or the best reasons for investing in a mutual fund is what they call diversification. So you know the old story, right? Don't put all your eggs in one basket, right? You know that. That's the old grandmother saying, because if they break, then everything is gone. So this is the same way that you do it in your portfolio. So don't put all your money in one place. Now, very difficult for an investor to go and select 20 companies, 30 companies, and like you said, monitor it, manage it. So might as well give it to an expert. That person is going to put it into a portfolio. Hopefully that portfolio will do well for you. Obviously, all portfolio, we want all of them to do well, but some do well, some do badly. But over a period of time, your investment experience should be good.
So today, on this episode, and thank you so much for that, Raghav. On this episode today, we've understood what is mutual fund. Next time, we're going to talk about why it may be a good choice for you compared to other options. Stay tuned to this special series.